So I clarified for you in the last discussion that we had, the bait that's out there, the marketing that's out there that tells you that you can develop business credit, you can structure your business entity a certain way and put a bunch of trade lines on, get a certain paydex score and go out and get the best business funding and the highest level SBA and bank level funding was pretty much BS for the most part, for most solopreneurs and small businesses. That having been said, what I didn't cover in the video was how working in conjunction with personal guaranteeing and business credit can literally open the floodgates when it comes to business funding and getting access to business capital at the highest levels. This is the golden ticket to getting the best funding options available at the highest limits possible. So what that basically means is the idea of going out and developing business credit and structuring your business entity a certain way and getting access to all this capital by itself is BS. Now doubling down, using yourself as a personal guarantor, as a strong personal guarantor, and coupling it with business credit and proper business structuring, that will get you access to a ton of capital from all angles possible. SBA and high-level bank funding all want personal guarantors unless you're some really, really large enterprise. That having been said, when you have quality personal guarantor, personal credit, personal financials, tax returns, all of these different things are strong, they also within the underwriting process consider the credit and the structuring of the business. It does matter. What I said in the last video may have thrown a lot of you off to thinking that it was completely false or that it didn't exist. That's not true. Banks care very much about the trade lines that are on that under that business's EIN. They care very much about if the address is accurate and a quality business address. They care very much about the legitimacy of that business and that business having its own track record of paying bills on time. It does not exclude the operators and owners of the business is what I was clarifying. That having been said, you want to marry the two. You want to create a quality business structure that has all of the dots and T's crossed and I's dotted, that will have a quality address, quality phone number, good business name, good NAICS code, and as well as trade lines stacking up, as many as you can put on there as possible. You want to go through the regimen of building quality business credit and building out a business profile. You just don't want to have the mindset that you won't have to personally guarantor. That's not the case, and it's also not how you should be thinking about it. You want to bring these two together so you can become a powerhouse for funding. And underwriting, they're looking at the whole thing. These big banks, the Chases, the AMEX, the Truist, SBA, all of these entities are looking at the entire picture. They're not going to isolate you as the owner and operator, and they're not going to isolate the business from the owner and operator. Bring these together. Quality personal credit, great DTI levels, great job history, good strong income, positive tax returns, showing a profit. Same thing with the business, revenue generation, business trade lines on there that you're paying and showing good credit history, a quality paydex score, great business address. These are the things that you want to put together, married in a pot together. When you go to underwriting for lines of credit, for SBA loans, when you go in for, if you're really at that level where you're buying other businesses, which is doable, especially through the SBA loans and other funding methodology, term loans through banks, even high-level business credit cards. You want the higher limits. I'm talking $40,000, $50,000, $60,000 limits and above. You get there by marrying the two together. Established business, ideally over a year old, good revenue, doesn't have to be ridiculous, but just has to have a decent amount of revenue that's exceeding monthly expenses for the business. And again, marrying all of that great business structure, business revenue, and business credit with great personal guarantor or tours. You, yourself, or any other owners and operators in a business, great personal credit, good spread between your expenses and your income, great job history. You put those things together, this is literally the golden path to the highest level of funding that you can get to scale and grow your business to unbelievable levels. And it's pretty doable in a reasonable amount of time. So I plan on breaking out, more smaller videos. I've already covered a lot of this, but I will break out videos, in smaller bites to kind of cover each one of these topics so you can be a powerhouse when it comes to laying your file down in front of lenders and underwriters. To all my pioneers, welcome back. To my new viewers, welcome in. Comment down below and let me know where you are when it comes to structuring out your business And what aspect of this are you struggling with when it's time to get access to capital? And what do you plan on doing with the capital once you finally get over that hump? If you want to learn more about myself and the channel, start in the description section and work your way to the About section on the channel. Subscribe, like, and share this with other entrepreneurs and potential entrepreneurs who need access to this kind of content. Other than that, I want y'all to stay focused, stay in motion. I'll see y'all soon. This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.